Hi, my name is Hanna, and today we're interviewing Aaron Giles. Aaron Giles is the founder and managing principal of Agile Consulting Group and sells and use tax.com in the United States. Today, he shares his views on important trends as we emerge into the post-pandemic world.
This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax.
And Aaron, we're live. Good morning. How are you this morning?
Good morning. I'm great, Derren. Thanks for having me.
Fantastic. Thanks for sharing some of your time. Could you please introduce yourself to those who may be watching on YouTube or listening on the podcast platform?
Sure, absolutely. My name's Aaron Giles. I'm the founder and managing principal of Agile Consulting Group. So we're a boutique sales and use tax consulting firm that helps folks either maximize the benefit of the exemptions for which they qualify or helps them become and remain compliant with current sales and use tax law.
Okay. And for those who may not be quite up to speed, what exactly is sales and use tax? What does it mean?
So everywhere, I think everywhere else in the world except for the U.S., there's VAT, VAT.
Yes.
So in the U.S., we don't have that. In the U.S., each state sets its own laws and collects sales tax on the transactions. When you acquire something, you generally pay tax at the time of sale. Now, there are certain occasions where if you acquired something and it was not taxed, then you would owe tax on the first use of that item. So thus, sales and use tax.
Right. And of course, the rest of the world has like VAT or GST, but the US is uniquely complicated. I heard that we have a lot of sales and use tax jurisdictions in the US. Is it 10,000? Is that the correct number that I hear?
I'm sorry, I don't know the number off the top of my head, but it is very complicated. So there are a handful of states that make it simple for folks and charge a flat rate across all jurisdictions within the state. But that's not the case for most states. Most states have different taxing jurisdictions, either by county, and then some other ones are even more complex, where it's by city and even districts within the city.
Right. Yeah. So that when I listen to other so-called experts and I read what's available online, the number that keeps getting bandying around is 10,000 sales and use tax jurisdictions. But generally speaking, at what point is where's the threshold for having to worry or being concerned about sales and use tax?
All right. Well, the simple answer for U.S. sales and use tax for everything, if you want to be an expert, you just say, well, it depends, because it really does depend, unfortunately. So, going back to what we said about all the states, so they've drafted their own laws, and they've picked different thresholds for what constitutes establishing Nexus. So Nexus used to be in the U.S. You must have a physical presence within the state. A building, an employee. The Wayfair case from June of 2018 really turned sales and use tax on its head here in the U.S. And basically the crux of the case was you didn't need to have physical presence anymore. If you were doing enough business with a state, then you had Nexus. Now, so what is that? Every state has defined it a little bit differently. I would say there's been a clustering around certain thresholds. The thresholds in most states are $100,000 in revenue or 200 transactions. But you can't just assume that, because it is very different. Some of the larger states like Texas and California have higher thresholds. But you can't even make that assumption, though, because there are some other large states that don't go by that rule. So the answer as to when you need to start worrying about it is really when you start selling into a new state. You need to figure out what those rules are, so that when you need to be paying attention and when you're approaching that Nexus threshold.
But if it's as complicated as you're helping us understand, how is it possible for somebody who's running a business and has so many other things to worry about? How can they figure this stuff out? How can they stay on top of this?
Well, I'll tell you what, Darren, that's an excellent question, and that's something I get. We get folks calling us, emailing us daily, saying, "This isn't fair. How are we supposed to know this stuff?" And
Yeah.
oftentimes, the conversations we're having is with someone who they realize now in hindsight that they've already established Nexus and they've got sometimes some pretty significant liabilities, and they say,
Mhm.
"Well, how can the state have done this to me? Because they didn't notify me."
Mhm.
Um, and I have a lot of empathy for that, and I don't always have a great answer for that.
Mhm.
The state can't notify you because they don't know you're there. If you haven't
Mhm.
registered, how can the state know what you're doing?
Mhm.
But yes, I do have a lot of empathy in the fact that it is very complex, and sales news tax is not the first thing that any business is thinking of. They're thinking about customer service, delivery times, quality of his products, and sales news tax is just sort of along for the ride, if you will. So really, the best way uh, to stay out in front of it, to make sure you don't end up with some big liabilities, is to be proactive with it. So
Mhm.
if you're selling into a new state, if you're selling into the U.S. market for the first time, figure out how are we selling nationwide? Are we selling in a few states? And go and get conversant with those laws. And so
Mhm.
that's where folks like you, Darren, are a wonderful resource
Mhm.
for people who are trying to get up to speed with what's going on with sales and use tax in the U.S.
Okay. And what about software providers? Is that like a good place to start off with if I'm an online seller to figure out whether,
Sure.
I need to pay attention?
Well, so software's
Mhm.
great. All right. So,
All right.
going back to the number you gave us of the 10,000 jurisdictions,
Mhm.
well, it is essentially impossible to keep up with those rates. In theory, they change on they could change the first of every month.
Mhm.
Obviously, not all of them do, but a handful do every month. And to go in and to manually update your system with rates
Mhm.
is impossible. So
Mhm.
software is an amazing tool for that, and there are a bunch of really great options out there.
Mhm.
There are a couple that we're really partial to um,
Mhm.
because we've worked with them in the past, and we think that their systems are ideal.
Mhm.
Really, and we can talk a little bit about how you choose your software, but the software is a great tool to you know, to do, I guess, the blocking and tackling, to make a football
Mhm.
analogy. Maybe that's not a great analogy for the rest of the world, an American football analogy, but um, yeah, so the problem with software is it'll do what you tell it to do. So if you
Mhm.
don't know what to do, the software is not going to help you too much.
Mhm.
Um, now, there are certain cases, if you just want to start collecting tax everywhere, sure, turn on the software, start collecting tax. That's simple. But if you're paying attention to nexus and thresholds and things like that, um, the software will just do what you tell it to do. So you must say, okay, now it's time to go turn on Georgia, or now it's time to go and turn on
Mhm.
California. But the software tools are amazing, and they do a really good job.
Okay. And, I want to take a step back a bit in terms of the transactions that need to be monitored.
Mhm.
Obviously, physical product, but what about if you're just providing service? Is
Sure.
that subject to sales and use tax as well?
Okay, so when you talk about service, we can think
Mhm.
about it two different ways. One
All
is
right.
you actually have someone with boots on the ground providing
Mhm.
service. Now, if
Mhm.
you have that situation, then you absolutely have nexus in that state, so you must collect tax. Now, that doesn't mean the
Mhm.
service is taxable.
Mhm.
Again, some states service is taxable, some states service is not. Um,
Mhm.
and again, and one other thing that software is really good about is if you code your products correctly,
Mhm.
it will figure all that out for you. Hey, should I be
Mhm.
collecting tax on shipping here? What about shipping and handling? Is that different? All these nuances that are really complex, and
Mhm.
again, if you could just figure it out once for the U.S., it would be amazing. But
Mhm.
there are 45 states with sales tax, so you've got to figure it out 45 different times.
Hmm. Wow. Okay. And how does one go about finding what is the first step? I guess you just start a business and is going to be doing like $1 million from day
Uh-huh.
one. You'll be moving up gradually and you're going to be mindful of your cost. You don't want to spend too much money up front. So in terms of being sensible, yet at the same time being cost efficient, should my first step be to speak to a consultant or to look at a software tool?
I guess the answer to that would depend on how
Okay.
strong your internal team is in regard to U.S. sales tax, right? So what we see oftentimes here in the U.S., so we've helped you and we've helped other overseas clients in the past, but the core of our business are from folks here in the U.S.
Yeah.
And so they don't even know what they're doing here. So oftentimes, they'll reach out to us and say, hey, a lot of these organizations have a controller or a CFO. They have no real established tax team, tax department. And so, the advice they're getting is either from their CPA, from their attorney. And again, it depends on the CPA or attorney that you have as to how sort of sophisticated they are. A lot of CPAs know enough to know when you should be concerned, but a lot of them aren't really experts in sales and use tax because it's such a niche. So a lot of times, we'll have prospective clients that reach out to us and say, my CPA said I needed to solve this problem, and I don't really exactly know what it is, but fill me in. Which state should I be worried about? So the first thing we like to do, with anyone who reaches out to us is we want to understand. Tell us what last year looked like, or tell us what this current year to date looked like. Okay, let's see your revenues. Let's see how they're distributed across the states. And so that's really the beginning of what I would call a Nexus study. So a Nexus study tells you where have you established Nexus, or where should you be alert to being you're near the cusp of establishing Nexus. Right. And so now once we've figured out where you have Nexus or you have concerns about Nexus, well, then we can go about getting you registered. The registration is not it's not a complex process. It is, like many things in sales and use tax, it is different from state to state. I'll give you a perfect example of how it just makes people's heads spin. So we have a longstanding client. They're a manufacturer. They've always sold wholesale. They just want to start selling retail. And as part of the process, they gave us a list of, 15 states or so where they wanted us to register for them. Well, so, most states, it is 2020, almost 2021. And you would think you could go online and you could register and in a pretty expedient manner, get a sales and use tax license. Well, not always. So, for example, so this client, they had a withholding permit in the state of Colorado, and so if you already have a different type of a tax license, even if you're not using it anymore, you can't go online and register. You must print out a paper application, fill it out, mail it, to them, and it's a 4 to 6 week processing time.
Wow.
We registered them everywhere. The CFO came back and he said, well, what is going on with Colorado? Why haven't we heard back from them? And it's just it's another illustration of how it's just different from state to state. And he said, well, I just can't understand. I want to give these guys money, and they don't want my money. I need a license to give them money.
Okay, so if I was to summarize, so I have a business, I'm doing stuff online in the US. My first port of call really needs to be a Nexus study. I need to find a professional, qualified, experienced, decent track record and go to them and say, this is what I've been doing. These are the states, these are the jurisdictions I've been covering. Do I have exposure? And if I have exposure, what do I need to do to become compliant? That's fair enough, right? And you also pointed out that some jurisdictions, you can do it online, you can register online, and then some of them tend to be quite manual. In that case, if it is manual, then a software solution maybe is not available yet. So you're looking at manual compliance. Okay.
Well, even if you want to register, everything you said is exactly right. But even if you want to register, if you go and use a sales tax software program, it's not going to do that for you. You need to go and get your own registration and then plug it into your sales tax software. I guess the only point I would make to piggyback on what you said is that's really the most prudent way to go forward, and also make sure you're only collecting tax and only have filing responsibility in the states where you have enough volume. Alternatively, you could, if you didn't want to do a Nexus study, you could just say, I'm going to collect tax everywhere. I'm going to register everywhere. I can't tell you that's wrong either. It depends on your growth rate. It depends on what your plans are. And it depends on your capabilities for staying compliant and continuing those filings. So sales and use tax is generally filed on a monthly basis. And there again, it depends on the volume. So there are quarterly filings, there are semi-annual filings, there are annual ones. But generally speaking, most of them are going to start you at monthly, and then if they see you don't have a big volume, then they may back you down to a less frequent filing. So, but that's labor intensive too.
It is. And then there's, I guess, there are two ways of looking at the compliance process as well. Do I wait until my level of activity is such where, okay, I'm seeing, my business is doing okay. Now I need to seek out a consultant to do a Nexus study after the fact? Or do I have my business projections? This is my budget for the year, and take my budget to that consultant for the Nexus study? Which one should I be looking at?
Well, so I guess it depends on how mature your business is. I guess that'd be my answer. So, if you're a startup, you're just selling into the U.S., we need to know what you think is going to happen year one. If you've got good data from prior years and it's reliable and you can have a predicted growth rate, a combination of that is all good. From my experience, most people aren't thinking about it on the front end. And maybe you're seeing people being more cautious, but usually people are coming to us after the proverbial horse is out of the barn, and they say, "Oops, we didn't realize. Help us get this right and get compliant going forward."
Okay. So whether you do it proactively or reactively, you've come to a stage where you've engaged a consultant and you've done the Nexus study and you have filing responsibilities. Now, there are quite a number of software solutions and they all seem to be, all bells and whistles, and they can promise you the world. How do you decide which one to use? And they're not cheap, right? So how do you figure that out?
Sure. So that's an excellent question, and we could spend an hour just talking about software probably. So let's talk about software and then let's talk about filing, unless you want to do it the other way around.
No, your call.
Okay.
Your choice.
So how do you select a software provider? So there are a bunch of solutions. They all do the rates well. To be honest with you, I don't think one's better than the other as far as collecting the correct amount of tax from customers on transactions that you say that should be taxable. But they do have different strengths and weaknesses. So what I would say from our experience here is that certain software programs are geared to certain products. So if you're selling medical products to hospitals, there's a certain program that's going to be a great solution for you. If you're selling arts and crafts on Facebook, there's a different program that's going to be better for you. And then you've got everyone in between, right? We've got nutritional supplements over here, and we've got clothing. There are some things that will work well with for example, clothing will probably work well with all the software providers, but they've kind of siloed themselves into different niches, if you will. And so knowing what you sell would be the first step as to how we point you one direction or the other. Now, you also mentioned cost. So if cost is a consideration, you're right. There are certainly more premium solutions than others. And even within a software package, there are usually tiers. Some of the tiers are based on volume, but there's also tiers based on service. So one really big player in the market, excuse me, a big player in the market, there's a pretty cheap solution and it works. But you better know how to set it up, because they're just going to if you want the cheap one, that's on you and your team to get it implemented. So we do a lot of that, helping folks with that. We're not programmers at all, but we understand tax law. So another recent project we were helping someone with is that they wanted to use this particular program, but their ERP system didn't have a pre-built integration to it. So they went back to their programmers and said, we need to build something that plugs in and pulls these rates out. So we can't do any of the programming, but we can certainly tell you if it's working and whether it's pulling the right queries and things like that. But yeah, cost is a big issue. So if you want them to help you implement it, if you want them to build an integration, some of them will make you get a third party. As far as implementation, again, if you pay to a certain level, they'll come and give you white glove service with it. But a lot of startups don't want to, jump in the deep end of the pool, paying top dollar. Particularly for something that is, again, is usually an afterthought. It's not like it's like, oh wait, now we need to pay this too, just to be able to sell this. So.
Okay. All right. So again, I'm going back to first principles. So I have started a business. I'm selling stuff online. Whether it is I have a fantastic budgeting process, so I know what to expect, or I let it run for a while so I get a run rate, and I have history. And with that, I can take it to a consultant and get a Nexus study done. So the Nexus study will identify which jurisdictions. A lot of jurisdictions, God knows how many there are. There are a lot. I need to register with. The registration process will be manual. It's not something that you can get us a solution, a software solution for. You need to manually register with the jurisdictions in which you may potentially be exposed. Now, once you've properly registered, you would have the ongoing compliance. Generally speaking, the sales and use tax returns are monthly, but they could be quarterly, they can be annually, it really depends. So you're looking for software. Now the choice of software, there's no one size that fits all, perhaps clothing, but generally speaking, some software will work best with some platforms and certain business models. And that choice, perhaps you would need some level of support. You need the same consultant, perhaps, that would have helped you with your Nexus study, can perhaps help you with the choice of figuring out what's the right service provider for you. And having even done that, there's the implementation process. It's not like you're buying Microsoft Excel. If you just download it and it just works. No, you have to integrate it with your business. And that would require maybe some IT support, or maybe it'll be easy. It depends on how you do your business. Okay, I'm with you. So far, so good. Now, suppose I've got that far and I realize through no fault of my own, I have been breaking the rules. So there's certain jurisdictions that I should have registered with, but I just didn't know. I was testing the market out. I didn't know how much I was going to sell until after the fact. We're a year in, things look good, and have passed the threshold. And let's pick a particularly aggressive jurisdiction like California. Okay. And I owe them sales and use tax. How should I approach dealing with outstanding debt?
Sure, that's a question that is usually the next question right after we've got people with their Nexus study. Okay, how do we fix this? Right. So, the answer that I would give you may not be the by the book answer. I think this is a real world answer. So, there's really two different ways you can move forward. Number one is you could do a voluntary disclosure agreement. A VDA. So basically that is you coming to the state saying, oops, I haven't been doing this right. Here's all of the sales, the taxable sales that I've made. And, I want to come in, I want to come in and begin doing this correctly. So if you file a VDA, you can apply anonymously. If they grant you access to the VDA program, then you must fully disclose who you are, all of your sales, et cetera. And if you do that, they will, every state's different, but they will generally waive penalty and sometimes interest. So And then there are a couple states that will actually just make you an offer. So you say, all right, we underpaid by $10,000, and they'll say, hey, if you write a check for $7,000 today, we're good to go. So that's a voluntary disclosure. So now the appeal of the voluntary disclosure is that you avoid the additional penalties and possibly interest on it. You will register through the VDA process instead of a separate registration. So they will help you with that. And it's all above board, right? So it's all just you're just clearing up these problems with the state, and the state appreciates. A question I get a lot is why would a state make all these these generous offers to me, if I haven't been doing this correctly? And look, the state's busy, and all these states are busy with ongoing audits, and so anytime you're making their job easy for them, they're willing to work with you on it. So that is like the formal process if you have unpaid liabilities. Now, if a lot of our clients say, oh my gosh, we should have been there for a couple of years, and now I've got I've had several $100,000 liability. I don't want to pay that. So, and I have empathy for that. And so really what I would tell you is that if you don't want to do a VDA, that really speaks to what your risk profile is, right? So if you file a VDA, you will not be audited for those prior periods. You've come and as long as you've been honest and truthful about what those prior periods look like, you've got no problems. Now, you could just choose to register and start collecting and start filing, beginning today. And that is more appealing because there's no outlay of cash. So usually if you're out of compliance, it's not usually that you've been collecting tax from your customers and just not paying it to the state. Generally speaking, you haven't been taxing anything, so any of those tax dollars comes straight out of your pocket. So a lot of folks that we work with choose to opt for to register, or not even folks we work with. We hear stories all the time. So so they'll go in, they'll register, they'll start paying going forward, and at work sometimes. It depends on a bit of luck of the draw. Like I said, it depends on your risk profile, but it's one of those things that a lot of people do, and they get away with it. But if you do get audited, then you're going to have problems. You're going to have to pay those penalties. You're going to have to pay interest. So the way it works in most states is that if you've been filing sales tax returns, the state can only audit you for the prior 36 months. But if you've not been filing them, they can go back for 7 years.
Wow.
So
essentially the statute of limitations is 7 years.
Correct. Statute of limitations is 7 years. So if you register today and you start filing this month, and next quarter they flag you for an audit because they for whatever reason they find it to be suspicious, or it's just not your lucky day, they can go back for 7 years because you haven't locked in that 36-month time frame of filing sales and use tax returns. I don't have a great answer for you on that one, unfortunately. We at the end of the day, we work for our clients, and we'll do what they ask us to do. I feel like my job is to educate them, to give them if I worked for the state, what would the state think of this situation? And I can tell you what that is, and then what you choose to do with it is really, it's up to you guys. So
okay. So that statute of limitations, 7 years, and then 36-month look back, is that across all 45 states, or is it just generally speaking?
It's not that simple. So just like many states have clustered around the threshold of $100,000 in sales and 200 transactions, most states have that threshold of 36 months is the look back period or statute of limitations. But there are varied ones. So Texas is a 48-month state. Illinois is a really unique one. It depends on what time of the year it is. If they come to audit you today they could go back and look at things from the prior, I think, this year and the prior 2 years, and then the last half of 2017. That was probably really confusing. But anyway, the statute of limitations varies by state. So,
Understood.
but most of them are 36.
So at the federal level, there was a voluntary disclosure program, but it got discontinued under President Trump. But similarly, what you would do is, well, it hasn't been discontinued, it has been drastically altered, but essentially it's the same thing, that you register anomaly, you seek acceptance into it, and typically you would be accepted unless they have already identified you and there's an ongoing investigation, like a sealed indictment or whatever. So you apply, you get accepted, and then you come clean with everything. And there's a defined look back period in at least 6 years for returns, or whatever the case may be. And that's for those who have been willful versus those that have been non-willful. So at the federal level, they make a distinction between those whose non-compliance is willful and non-willful. And again, there was no definition in statute, so we're looking at case law. So case law was telling us the distinction being someone who knew of their legal responsibility and deliberately evaded that responsibility. That's willfulness in a nutshell, and you can apply under the voluntary disclosure. If your non-compliance was non-willful, you honestly didn't know. Then there was another program called Streamlined with a shorter look-back period. And again, well, you get to waive some of the more egregious penalties, civil and criminal, so that was appealing. And the most you would get is interest, if that. So that's how it was. And there were practitioners who, and like you said, and I'm just drawing that comparison between sales and use tax and federal taxation, there were those practitioners who were saying, you know what, you can go with a quiet disclosure. You know, you can just don't say anything, just slide it in there, or just go forward, just forget the past, just go forward. But there were, of course, risks associated with that, both for the taxpayer and increasingly for us as professionals. So if it is, for example, our firm somehow was associated with a taxpayer who took a risk and did not report and just went forward, then the IRS may say, well, hold on, maybe this is a pattern, maybe this is how they advise their clients, so let's audit all their clients, or let's take a healthy sample of their clients and have a look to see whether we can find anything else. So there was a serious risk, and at the end of the day, it boiled down to, you know what, come forward. So it created an environment which encouraged taxpayers, just come forward with it. Sure. But what I'm seeing and what I'm understanding is that in sales and use tax is not exactly that cut and dry. To some extent, there is a strong enough incentive to just forget the past and look forward. Am I being fair in saying that?
Well, so the program you described, it's got a lot of similarities to the VDA program. Yeah, and again, I mean, my advice is always, you should file the VDA. But then people come back to me and say, I can't do that, or I don't want to do that. So in situations like that, I mean, I can't force them to do that. But you're right. So in a situation like that, so if you came to me and said, I just want to register, I'd say, yeah, but you've got $1 million in liabilities here, Derren. California's not going to be too happy with you. And you say, so if that's the case, what I can do for you, I can complete that registration. I can fill everything in, but you're going to have to sign it and you're going to have to send it in, because, legally, I can't attest that everything I put on that document is true. Right. So that was one of the statements of it. So I know that's not true, so I can't sign that, but as the business owner, if that's what you want to do, I can certainly, put all the right information in the right boxes for you. And then you can do what you will with it. So that's how we've handled it. And you're right. I do think that at the federal level, there's a little more sophistication. Part of these states, some states are just as sophisticated as the IRS. A lot of them aren't. So you mentioned at the beginning of this discussion, hey, let's take a sample. Let's talk about a traditionally aggressive state like California. So yeah, California is we could go put we could put them all on a list and kind of rank them as to who should you mess with, and if you're more likely to mess with them here, they're going to catch you, and there's some other ones that maybe not, but yeah, it just goes to sophistication, it goes to organization, and yeah, so it varies.
Okay, so of the 45 or so states, which are the, let's say, the 5 that you definitely do not mess with?
The 5 you definitely don't mess with for sales tax. All right, well, California, I agree with you on that one. I would say Texas is very aggressive. Texas also got a 48-month statute of limitations, and they have pretty high tax rates. So that's another state that is challenging to deal with. New York is also pretty aggressive. And then I would say probably after that, I'd probably say Illinois is another one that is very accommodating through their VDA program. But actually they call it the VDP program, just to be different. There's an illustration of why sales tax is different everywhere. They can't even call it the same thing. So Illinois is another one. And then I guess I'd probably say the state of Washington is also pretty aggressive.
Right.
And
what about on the other side of the spectrum, the 5 states, not that you're calling them out, but they are not as sophisticated. They're not as sophisticated as the other 5.
Yeah. So I would say that there are some states here in the Southeast that maybe aren't as sophisticated. So now look, I'm not saying that they're not sophisticated. So there are still some states that haven't figured out this Nexus thing yet. All right. So Florida doesn't have an economic nexus standard. So it's not that you can get away with it there. It's that they haven't decided what they're going to do yet. So in Missouri is another state where they have not yet sorted out their economic nexus. So they're not on the list of people you can just, so if someone's watching this 12 months from now and they've got a program, hey, Aaron said they only have, so things are always changing, and it's job security for you and for me. But there are some states that do have sales tax and maybe are not as diligent at the auditing and catching people. And so I would say it's probably states that if I had you guess, you'd probably guess them because they're not huge volume states. They don't deal with a lot of folks, so I would say states like, Mississippi, Nevada, Oklahoma, Arkansas. So there's a handful of them that I would list for you. And now maybe they'll watch this video or this podcast, and they'll say, wait, boy, we better get after these audits.
Okay.
You better check and subscribe.
So going back to your risk profile, I am aware of a certain tax attorney who specializes in sales and use tax, and I've heard that what he's advised. This is secondhand info. This is from his clients, not from him. So who knows what he really said? But so we have mutual clients, and apparently he has advised on more than one occasion. Go forward. Forget the past is past. Let's go forward. But he's gone even further to say, well, you might want to form a new entity with a different EIN, a completely different legal entity, and just discontinue sales on the old one. So in the event that they do catch up with you, they're coming after an entity that just does not exist. It's gone. So that's if that is in fact the case, and we're not saying that it is or it isn't, that sounds a bit aggressive. What are your thoughts on that?
I may know the individual you're talking about.
Okay.
And I've so I actually don't know him personally. But like you, I have some clients who've either bounced those ideas off me, or have come to me for a second opinion, or sometimes people want to check what I say and go get a second opinion from this It's probably not this one person. There's probably a bunch of them who think this.
Yeah.
So yeah, but I've heard that story too, and I've had people come back and tell me that, and I say, I mean, that's not right. No, I mean, at the end of the day, you can do what you want. Again, I can fill in this form and you can send it off, but that is, I wouldn't be doing my job, if I told you, yeah, that sounds like a great idea to me. I had a client that this happened with, in the last probably 2 months or so. And so I went, the CFO called me and said, hey, I got a different opinion and this is what this person thinks. And I said, well, yeah, I guess you need to tell me what you want me to do. Do you want me to tell you what like the honest, if I worked for the state and I audited you, do you want to know what that answer is? Or do you want to know what like the most optimistic, rosy picture is? And yeah, you might get away with it. But I mean, if it's not right, it's, I have a hard time doing stuff like that. But I've heard the story. Yeah. Just register going forward. That's more reasonable to me than creating a whole other entity and, pretending that we just set up business here. But maybe I'm the naive one. I don't know. I try to live by a code of ethics and honor, and that wouldn't sit right with me. And I can guarantee you that if any state figured it out, they would not say that was okay. So you can take that for what you will.
Sure, and I guess it goes back to that previous point. It depends on the state. There are some states that have this sophistication to perhaps join the dots, and then there's some that may not. So, it really depends. But if they catch on to it, then they realize, it's the same brand, even though it's a different LLC or whatever, it's the same physical product. And they do figure it out. I would imagine that they would be very unimpressed and they would be a bit more aggressive than otherwise. I would imagine. I mean, theoretically.
I agree with you. Wholeheartedly.
Now, and again, drawing the comparison to federal taxation, because that's where I sit. Part of the negotiation with the federal government, sometimes they encourage you or they give you brownie points for calling out your advisor. So if it is part of your misstep is because you were advised, if you give them a name, they will let it slide. I mean, just like with criminal proceedings, it's civil, but give us a name. Just give us a name and you're good. With the more sophisticated states on that side of the spectrum, have you noticed that type of behavior or not yet?
So I've not seen that. That's really interesting. So so name the bad actor here. Who gave you this bad advice, right?
Exactly.
And that's really clever, actually. So I'm not aware. So I know nothing but sales and use tax. So you always enlighten me about federal tax when we talk. That's really interesting, and that sounds like something that if I was a state, I would certainly be asking. I think that a lot of times, though, the answer would be, we just didn't know. Usually when people come to us with these problems, it's that one state has figured it out, and so they've been audited or they've been notified of an audit. And so if you've been notified of an audit, you cannot opt into the VDA program. And so oftentimes they say, and usually you're very prescient. A lot of times they say, "Hey, I got a letter from California." If I was handicapping them, that would be, if I had to guess which one it was, I would say California. And California audited, notified me that they think I have Nexus and that I haven't been collecting tax. What does that mean? So in a case like that, if California said to them, well, who misadvised you? The answer is probably nobody. Everyone was just asleep at the switch and not even tuned into, this is something that we should be concerned about, So that's not always the case, obviously, but I think a lot of times in sales tax, that would be the answer. Is that something that you see on the federal level too, where it's just, it was unbeknownst to anybody, or is it bad advice more often?
It really depends. So going back to that distinction between willful and non-willful, there are times when the taxpayer genuinely was unaware of their responsibilities. They just didn't know. And then, of course, there are times when they did know and they took decisive and credible steps to evade, not just avoid, but to evade this known legal responsibility. So it varies. But in our practice, we get more of the people that it was an accident.
Yeah.
They genuinely didn't know, although every once in a while, the other type would walk in the door. But as you mentioned that with California, with the federal government, there's a relationship between the franchise tax boards and the IRS. So they talk to each other. So if one picks up on an issue, they send it up the road or they send it down. Does that happen with states as well? So that, like, if California picks up on something, would they send like an email to the state next door? Hey, you might want to have a look at these guys. I'm just saying,
No, I mean, that's you and me should just start running some of these Department of Revenues, because we'd find some revenue that's been leaking out the back door. No, they don't do that. So I'm located in Atlanta, and Florida's a neighboring state. We've got an office in Florida. If somebody gets audited in Florida, Florida doesn't tip off Georgia and say, hey, you should look into this. They weren't doing stuff right here. I know you're my neighbor, or I'm making the analogy of neighbors, but hey, Florida's, I don't know what number state it is for size. I guess it's a top 5 state for population. They don't email the other 4 and say, hey, you guys should be suspicious of this stuff here. Maybe it's worth kicking the tires. So no, the states do not do that. And one thing I've noticed in the last decade that's really changed is that even a decade ago, you could get audited in one state for one kind of tax, and they wouldn't even communicate with the other department. So you could be, you could be audited for income tax here in Georgia or payroll tax, and if you've got a problem with your payroll tax, well, if I'm the state of Georgia, I sure would want to look at the other taxes, because why would I think you're doing those well?
Exactly.
That didn't happen. That didn't happen a decade ago, and it's beginning to happen now. So oftentimes, if you get audited for one type of tax, certainly these more sophisticated states, and they see a problem, expect a steady stream of auditors coming in your door saying, "Oh, now we're here to look at franchise tax. Oh, now we're here to look at income tax." Again, that's something that's really changed. So they've become more sophisticated, and I'm sure they'll continue to do that, because it just makes sense, right? If you've got a problem, why would you think that they're great at filing everything except for one type of tax?
Okay. So that leads me into another line of thought. What if I were to ask you, I know, it's not your thing, but if you were to predict the trends that we need to pay attention to, so I'm guessing you'd say one of them would be that sharing of information. So more states will get into that, even within themselves. Different tax departments will begin to speak to each other if they, to look for common infractions. What else do you think would be a trend in sales and use tax? Just imagining.
Yeah. So, so the other thing that we spend a lot of time thinking about and being alert to is changing taxability of items. So that can go both ways, right? So there's really sort of 2 parts to our business. So we've always helped you and your clients with the compliance side, making sure people are registered and collecting tax correctly and filing it correctly. But there's another part of the business where we go back and we hunt down refunds for people where they've overpaid their taxes. Okay. So now it doesn't, so there's 2 sides to every coin, but those changing definitions of what's subject to tax and what isn't subject to tax is it's sometimes it's done through changes in legislation, but more often it's actually done through court cases, ruling requests, and things like that. So my day starts every day by reading a little digest of every new ruling that came out in the U.S. Related to sales tax yesterday. And get a big cup of coffee. It's going to be exciting, But so it's changing definitions, right? So so you can, going back to the software thing, so you can set up everything today correctly, and then on the first of next month, well, this thing that you thought was not subject to tax, now it is. And, so it's moving the, moving the goal line on you, moving the goalposts on you as well. So, so that's always a concern, and it has always been and always will be a concern. I'm not sure it's necessarily a new one. So, the other thing that'll be interesting to see here is, maybe it kind of dovetails with that is like digital products, right? So much more of our world is non-tangible, and so just like the states figured out, it took them a while, but this economic nexus issue, um, just like they figured out how to get that revenue from letting it slip through their fingers, as things become more and more digital and less tangible, they're going to change the definitions and make sure they don't lose out on the potential revenue from that. Now, I don't know if that's going to happen in the next year or so, but that's certainly something they're looking at. So I think that's something to be concerned about. Sales tax is always changing and dynamic, and so changing rules, changing rates, changing laws. So,
well, but a general trend would be a movement to capturing more and more transactions. So transactions that may be out of scope right now, keep an eye on it, because one would expect that they would at some point in time may become in scope. And you gave the example, because everyone knows about physical product, but digital products, apps, games, or whatever. Some states do, some states don't, but keep an eye on those that don't, because soon they may do, right?
Sure. Right.
Okay, that's just fair enough. And again, I guess other trends will be borrowing from other areas of tax. For example, as we said with federal, where there's greater sharing of information, basically creating mechanisms for capturing people who may be avoiding or evading. That level of sophistication, so that gap between the top 5 and the bottom 5, one would expect over time that narrows as everybody plays catch up.
Sure.
Okay. And then two, we're looking at this. We live in a strange year, COVID-19, and we've seen many changes. So, like in California, people talking about this exodus, right? So some of those taxpayers would have left California, would have left New York as well, and they have budgets to balance, and suddenly their revenue is down, so they need to be more intelligent with how they collect from the taxpayers that they do have. So we expect things to be more aggressive in those spaces as well. So I guess it's just all about the efficiency of collection and widening that net.
Yeah, I agree with that. I agree with what you're saying. Right? It's ever shifting, ever moving. And you're right. Those 2 states you called out. California had revenue problems in the past, and so they just wiped all the exemptions off the books and said everything's taxable, and then became hyper aggressive. And some of that has remained. Obviously, you and I both called it out as being one of the most aggressive states. It's still aggressive, right? Even though their revenue problems have improved. So. Yeah, but I think you're right. I think sharing of information between states is I guess I'm surprised they don't do it more. There is something called the Streamlined Sales Tax Board, and so I can't remember how many states are a member of it. I want to say there's 25 or so states, and the objective of that is to, in theory, what they're trying to do is make life easier for taxpayers. They're trying to cluster around similar definition or the identical definitions of what is taxable here, what is taxable there. But that it hasn't worked quite as well as they would hope, because a lot of states don't want they want the autonomy to do what they want to do. So and then there's states that are partial members, but it would seem to make sense to me that those guys would be sharing information, but it doesn't yet appear to have happened.
Okay, so one last question. As we mentioned along the way, there's so many service providers who claim to be experts in sales and use tax. If I'm an entrepreneur, I'm a new business owner, how do I really choose a provider to help me with that Nexus study, with determining what the right software solution to help coach me through implementation, just basically hold my hand through the process? How do I do that? What factors, what criteria am I looking for?
Sure, sure. Well, I mean, just like software programs are different fits for different companies, I would say that there are a bunch of competent, capable folks out there,
Mhm,
who can do this. And part of it is just fit. So
mhm,
you and I met, and we hit it off,
mhm,
and so part of it's just personality and
mhm,
who you like. If they're thinking about ethics and morals the same way that you do, well,
mhm,
then that's probably a good choice. If someone's telling you something and you're thinking that doesn't sound right to me,
mhm,
then go find someone different. Now
mhm,
if you think that me saying you should file VDAs is, yeah, if that doesn't suit you, fine. Then there's other folks that will just do what you want them to do.
mhm,
So to me, I would go and look at someone's resume. I'd go look at their experience.
mhm,
So I've been doing nothing but sales tax for 20 years.
mhm,
That certainly isn't the longest in the industry, but I've seen a
mhm.
lot in 20 years.
Yeah.
And so I would say experience.
Mhm.
Resume and experience is how I would make that decision. Um,
So resume, experience, and ethics. Yeah.
yep, yep,
Yeah.
yeah.
Okay.
Personality, fit, ethics. Yeah. So
Yeah. Aaron, thank you so much for your time. I really appreciate you sharing your insights and your 20 years of experience. Any final words?
I guess one thing we didn't touch on, I'll give you a quick
Oh, yeah.
soundbite. And maybe
Yeah.
maybe we do a part two. We talk about this because so
Sure.
something no one ever wants to talk about is audits. So let's say you
Oh,
do get
yeah.
audited, right?
Hmm.
Okay, so um, you know, you can go find someone to help you with that audit.
Hmm.
The alternative is either, I guess there's three alternatives. You can tackle it in house. You can
Hmm.
just give everything to the state and see what happens,
Hmm.
or you could have someone like you or like me come in and help and say,
Yeah.
"Hey,
Yeah.
let's go through this together and let's figure out what we think the right answer is and present
Hmm.
that to the state." Yeah,
Hmm.
and so you talked about tax evasion.
Hmm.
A great saying is there's a world of difference between tax avoidance and tax evasion, right? So
Yeah.
now we can go and present the facts in a
Hmm.
more favorable way and still be
Hmm.
ethical, right?
Hmm.
So but if you are audited, um, I would encourage someone to go and get professional help for audit
Hmm.
defense or audit representation,
Hmm.
because that's part of this whole nexus and this part of this compliance thing is there are going to be occasions where they find you before you come forward, and so there's
Right.
help out there for that.
So is there like a rule of thumb? So what are the general like triggers that would distinguish a client or taxpayer or entrepreneur who says, I can handle this myself, or you know what, I need help? What distinguishes one from the other?
Yeah.
Yeah.
So I think it's probably just the way people are wired, to be honest with you.
Right. Yeah.
So um,
Mhm.
you know, CPAs, often will be the first line of defense on that.
Mhm.
And look, you can't beat a CPA for auditing experience. Like they're going to definitely guide
Mhm.
you well for auditing, but they may
Mhm.
not be a sales tax expert, right? Um,
Exactly.
you
Yeah.
know, so
Yeah.
so we partner with CPAs,
Mhm.
obviously, with and
Mhm.
others as well, and
Mhm.
they'll field inquiries. They'll send us something and say, "Hey, I've done the best I can for this guy, but
Mhm.
I don't think that they should be assessing taxes on these things, but I don't know how to argue it and get those things removed."
Mhm.
So it's often a little bit of experience from doing this in the past that maybe moves it that last mile. So what I would tell you is that a representative will always help you.
Right. Yeah.
Sometimes people are worried about like the fees. We're going to
Yeah.
save you more money than you're going to pay us in fees. You're going to be the winner in that equation every time.
Sure. Sure.
So because we pride ourselves on delivering value to folks, and just like you
Mhm.
do,
Mhm.
right?
Mhm.
So
Mhm.
if you don't
Okay.
deliver value, that'll be the last time they ever use you, right?
Hmm.
So,
That's
you
for
know,
sure. So it depends on the potential risk. How much money is at risk here, and
mhm.
it depends on your personal risk tolerance and yeah, your personality. Whether you think this is something I want to handle in house, or you know what, I need to call in some support. Okay,
Sure.
I'm with you. Okay, great.
Yeah, but that's an important part of the compliance puzzle that we didn't talk about. And it's, it's, again, it's no one likes the A word, the audit word. So, but they do happen. So you just, got to move through it as best you can.
Well, let's take a look at that. And with federal, again, the comparison with federal, because of resource constraints and the greater use of technology, the probability, at least depends on your profile, but the probability of being audited is actually declining over time. But I would imagine with sales and use tax, it's going in the opposite trajectory. They are throwing more resource into it, so the probability of being audited is on the increase, is on the up and up, right? Am I correct in saying that? Yeah,
I agree with that.
Now, with federal taxes, we know that there are people that just get picked up in the statistical random sample, and you cannot avoid that. And there's certain red flags that the IRS does look for. For example, a lot of Schedule C transactions, someone who is a sole proprietor, they tend to get picked up more. People probably that are into crypto, they get a closer look than someone who is not a crypto trader. So on the sales and use tax side, are there any hallmarks, any flags that draws the attention of the teams in sales and use tax with the various states?
Sure. Yeah. So there are some things that are red flags. So if you're like an online retailer, an e-commerce retailer, and you start up month one, and so let's say that they chose the path of just registering and filing taxes going forward. If you come out of the gates with like astronomical sales, they're going to be suspicious of that, right? Because that's not usually. People would love for business just to boom from day one, but that's usually not how it goes, right?
Sure.
And look, now, I'm not saying that there's like any impropriety there, because in theory you could just started selling this into the different state, or but if you come in, boom, at a high level, they're gonna think that's interesting. If you've been reporting a very little bit, and then it jumps up, they're also going to that would be more of a red flag for that. And then another thing that it would only matter for companies that physically have like operations within the state, like a physical presence. But if you file taxable sales and you never report any use tax, then the state knows that's wrong, because you have to be buying some stuff that comes in from overseas or from a retailer that's not taxing you. And so if you have month after month after month of 0, 0, 0, 0 on the use tax, they know that's not right. So they'll eventually come and kick the tires on that too.
Sorry, could you go over that again? So this is, if it is that you have income tax, you mean like state income tax?
If you have a physical presence, like, so if you have a factory, or if you have a warehouse in the state, so you have an established physical place here, and you file sales tax returns. So we talked at the beginning. Sales tax is the tax you pay out when you buy things. But use tax, if you acquire something that is not subject to tax, but it's subject, you should have paid tax on it. Well, then you should be remitting use tax on that. So this doesn't mean anything for an e-commerce retailer, but if you physically have a location here and you never report use tax, the state is going to say that doesn't look right, because we know that they buy stuff that is not taxed, and at the time of sale. So that's a red flag for someone who physically is located in the state.
Right, and that ties back to the conversation, the point that you raised earlier, that the various tax departments do speak to each other. And payroll might have a quick look to make sure that that those are being remitted right. State income tax. If it applies excise taxes as well. Everyone just has to look to make sure that they're getting their fair share. Okay, right. And any other flags that draw unnecessary attention?
I would say those are probably the big ones.
Right.
I mean, you do hear just stories of people being randomly selected. That's always going to happen. But no, I think those are the red flags. Wide ranges in your sales. That's unpredictable, right? If it's like a seasonal business, you'd understand that. But if you see this huge spike, or Yeah, so I would say that, big changes in reported taxable sales.
Okay, that's good to know. That's good to know. Now, would again draw the comparison with federal taxation. The higher, all things being equal, the higher your income, the greater the probability of being picked up in a statistical random sample. Is it the same with sales and use tax? The bigger your volumes, the greater the probability of being picked up randomly, or it doesn't work that way?
I think that's true.
Okay.
I don't have any evidence to say that that's factual, but that would just make sense to me because,
Yeah.
why would you audit someone who's, making $1,000 a month in sales when you can, audit someone who's making, $1 million a month in sales, So, there's just more meat on the bone. So
Exactly.
that would make sense to me.
Okay.
And yeah, the folks that are reaching out to, and so maybe I'm wrong. Maybe I don't have the right perspective on it, but the people who are reaching out to us aren't, $1,000 a month in sales folks. It's all larger businesses. So
exactly. Okay. So just to kind of summarize the sales and use tax from the audit perspective. So the chances of being audited will be higher if there are irregularities in your sales patterns. If you just start off from zero and suddenly you're a hero, that kind of draws some attention. And they just logically speaking, the higher your activity, the greater your chance of getting some questions asked. And if you've been non-compliant in any one area of taxation, they understand that the tax teams talk to each other, and so questions may be asked from other areas of tax as well. Okay, great. And to summarize again, whether or not you should be looking for professional support to go through an audit, it depends on the amount of money at stake, obviously, and your risk profile, whether you think, I can really handle it, your personality, or whether you think, just to be safe, I want to bring in some support. But keep in mind that especially when it comes to audits, the professional support pays for itself, because once you choose the right team, which is of course important, once you choose the right team, they will make sure that their fees will be much less than the money that you would have saved, all things being equal. No promises, but generally speaking, that's how they prove their value.
Correct. Everything you said, I think you hit the nail on the head with that. Yeah.
Okay. All right. Wonderful. Great. So, okay. Anything else? Any other parting words?
No, I guess wisdom? That's it. And I appreciate you letting me slip that part in there about audits. But
sure.
No, I don't have anything else.
Okay. Aaron, thank you very much for your time. And if someone wants to reach you, how do they do that? How do they find you?
They can find us on the internet at salesandusetax.com. So.
Okay, that must be a very expensive domain to get in the first. I guess you were early, right? You were early to the game.
I got it early. So I was advised by someone, said you should totally get that. I didn't understand at the time. I said, why would I pay that when I could just go buy sales use dash? And he just said, oh, just buy it. You don't know what you're talking about. And
you thank me later.
20 years later, I'm very, very thankful I listened to him. So.
Okay. All right, wonderful. Aaron, thank you very much.
Great.
Have a good
one. Thank you for your time, Derren. Take care.
Okay.
Bye-bye.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.